It's not a fun day, but I'd be looking at this as an opportunity.
I've been thinking about, the people who've been coming on today of all sort of professions, whether it's a strategist or investor or whatever, analyst, defending all this or saying it's overblown. How do we know? What if it's not? And if it isn't, what does that mean?
We don't know if it's overblown. You're right. But this is the nature of technology. I'd be personally surprised if Nvidia became Betamax in the past week. I mean, that's really would be the kind of change that would be required to really justify selling Nvidia here. And given, I think, the need for AI because of global labor shortage and Nvidia chip dominance is still strong, unless a new model emerges that doesn't require GPUs entirely, I'd say that markets just generally do fire ready aim. I mean, I think it's it's hard to know, though.
I won't disagree with you on that. I mean, that's how the market tends to do that. But a lot of AI was sort of sold to investors on a hope and a dream, right? We haven't seen, in many cases, the ability yet to monetize all of this, or at least to have a sizable return on the investment that a lot of these hyperscalers are make tens of billions of dollars that they're pledging to spend. Doesn't that matter? I mean, what if some of that hope and dream just doesn't come to the degree that we thought, or we decide that it wasn't worth the money that we were willing to pay for it?
I mean, these are fair questions. If Nvidia was at 100 PE, I'd probably say that there's too much good news priced in, but the PE is around 30 times. I'm not sure that that's very demanding for investors, and if you look a couple years out, it's in the 20s. I don't think Nvidia is priced for perfection.
Is the market itself?
I don't think so. I mean, the 10-year now is backing off to 4.5, so you're still paying over 20 times for a 10-year bond. The median PE in the S&P is around 18 times.
Yeah, but I mean, because it's skewed, though, because of the mega caps, we're still like 22-ish times. So, earnings have to be really good from here on out, right? Don't tell me about multiple expansion again driving this train. You got to put up or shut up when it comes to earnings this period.
That's right. But, I've been researching companies since the early 90s, so over 34 years. I never found a PE for a high-quality company to be at 22 times, let's say for Mag 7, to be a demanding multiple. Again, I think if you're talking about price for perfection, it really has to be stocks where you have to back into the NPV of 100% earnings growth forever.
Tom Lee declares that right now is the best time for eager investors to buy Nvidia stock. He talks about the recent DeepSeek debacle once again, and how Nvidia dipping is an ample opportunity that opens up many doors. But that is not the only reason, and the rest may shock you into going all in on Nvidia. So let us take a deep dive into Tom Lee's reasoning and how it can benefit all Nvidia holders and buyers. Welcome back, everyone, to Investocracy.
What's your diagnosis of what the market's been contending with here in the last several weeks as we've gone sideways and had sort of this negative skew toward market breadth?
Markets kind of did flail into the end of last year and the first day of 2025, and I think it was trying to digest a few things, that the pretty dramatic move in long-term yields and the dramatic drop in yields in China. I think that there has been some concerns about macro as you saw some events over the past few days. And I think there was general profit taking and some sort of let's wait and see how 2025 is, given we just booked two 20% back-to-back years.
And do you think that those things will remain overhangs? I mean, obviously, you certainly have a bullish orientation. You feel as if the S&P 500 can get to 7,000 by mid-year before perhaps a pullback. Well, if we're getting from here to 7,000 in less than 6 months, you're talking about, 35% annualized pace of gain. So how do we get there?
Well, I think one thing the viewers need to keep in mind is that just because the calendar year changed doesn't mean that the strength that we saw throughout 2024 suddenly has evaporated. There are tailwinds building because the Fed is dovish, even if they're making fewer cuts. But I think one of the sort of two important things happening early in 2025 is going to be, one, we're seeing manufacturing recover. The ISM manufacturing, posted one of the highest readings in almost 2.5 years. I mean, it's been below 50 basically for nearly 3 years. And the second is that I think the labor market could be softening in a way because whether you look at link-up data or the ISM employment, to tell us that the Fed now has to be focused back on supporting the economy. So I think this month could be quite decisive in the sense that we've got weakness because of some insecurities building, but I think it's, the same tailwinds are in place. I mean, I think it's still a buy the dip kind of market.
And in terms of perhaps the same themes being in place, does that mean that the leadership profile of the market you expect to stay similar to 2024? I mean, I know it's waxed and waned between mega cap growth leadership and then some broader participation, but we did finish again with dominance by the NASDAQ 100 type stocks.
Investors still are going to pay for earnings visibility, and that's why I think the Mag 7, including Nvidia, are going to be important holdings. But financial conditions should ease this year. Easing financial conditions does allow some cyclicals to post better earnings growth, like financials and regional banks, industrials, and small caps. So I think that there should be a case for broadening of the markets this year. And then finally, I think in terms of risk appetite, still one of the good measures to look at how risk appetite is to look at something like Bitcoin, and at 97,000, it's still telling us that, this is still a risk-on market.
Yeah, I mean, obviously it's held almost all of its gains since that little poke above 100,000 in Bitcoin. Although I do wonder what you make of the relatively heavy outflow we were seeing in the BlackRock ETF that holds Bitcoin, whether it was just sort of deferred profit taking into a new tax year or something else.
It's hard to tell. And I think with the ETFs, it is creating, I think, an interesting dynamic, which is that someone who sells a BlackRock ETF doesn't have a 30-day holding period if they buy another Bitcoin ETF. So I think in some ways you can see people doing basis swaps and stepped up in tax optimization strategies and not really having to worry about that 30-day holding period.
Amidst the DeepSeek revelations, the market is left to ponder. Is DeepSeek's advancement a technological anomaly or a harbinger of a new era that diminishes Nvidia's traditional stronghold in the AI realm? Shareholders are left deciding whether to hold steadfast to Nvidia stocks or hop on the uncertainty train driven by DeepSeek. However, as analysts assess the intricate landscape, some argue that Nvidia's prospects are not entirely reliant on the immediate shockwaves of R1's introduction. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
You look at the declines, for example, in Nvidia and Broadcom. Micron's down a ton again. This week, I should say, both those stocks are down double-digit percentage points. Is that this is only going to lead to more consumption, more chips, not less. But as an Nvidia shareholder, as that stock was up quite nicely yesterday, giving half of it back again today, that's where the real questions still lie. And it relates exactly to what Steve was talking about with Microsoft and what we talked about with Meta. Any suggestion whatsoever about a reassessment of spend, you're going to look right at that stock and 100%. See the impact.
Yeah. And I think for me, one of the things as I've kind of reviewing the news with DeepSeek over the weekend, obviously costs are undeniable. The cost to build out this large language model that they did was obviously far cheaper than what the cost of to buy an Nvidia chip. But the other thing that I think is somewhat debatable is performance, right? What is the real performance? Only enterprise and only consumers can make that determination. So for me, as I look to Nvidia and I look to Nvidia earnings towards the several weeks from now. Yes, I mean, all beltways have led back to Nvidia, and now this is a complete reset. We've heard from other players, ASML, obviously as an example, talking about this is only going to spur demand. We'll see. I do think it's going to be a reset, but I do think they have the most important chips at play for this AI revolution, but it is somewhat of a reset, and I think that's good.
Nvidia has built a robust pipeline of technological advancements supported by substantial investment from leading tech entities like Microsoft and Meta Platforms. Moreover, some industry experts predict that the U.S.-China power dynamics rather than a singular technological announcement, will ultimately guide the path for AI stocks, potentially transforming what seems like turbulence into long-term growth catalysts for Nvidia and its counterparts. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Nvidia, this was inevitable, and it's always been part of my thesis and why I don't have a big position, regrettably, because I would have made a lot more money in the stock. But part of that $80 billion in CapEx that we're hearing, the $65 billion in CapEx, I'm guessing, unless it's somewhere else, going to be somewhere else in your income statement, is going to develop of competing chips and cheaper ways to build out their AI capabilities. So it's no surprise. The only surprise with NVIDIA is the timing, because they were not going to be the first semiconductor company in the history of the world to maintain a technology lead forever.
No, but of course not. But the speed in which we are asking this new question is largely unprecedented.
Well,
right?
But the price at which the stock was selling implied that the monopoly could go on for a very long time, which is why we didn't own NVIDIA. And, maybe
you missed a lot. You missed a lot.
I understand that.
Nvidia's recent pullback may present an opportune moment for investment. As much as the path ahead is fraught with challenges from potential technological rivals and geopolitical considerations, Nvidia's entrenched position as a leader in AI hardware presents a robust likelihood of enduring relevance and growth. But what do you think? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.